Hi, this is Oli Hille and welcome to another trade mentoring video. Okay, so I'm going to leave this disclaimer up just while I talk, because it's just the standard disclaimer. So read through that as I talk for the first bit, and then we'll get on to some charts. So May 2013, which is obviously just a few days ago, was the best trading month I've had since December 2008, and my return for the month of May was just over 12%, 12%. Now, of course, some people watching this video will think that's excellent, and some people will think that's very modest. Those people who think it's modest will be the people who have been listening to people on the internet, reading stuff on the internet, etc., about how you can make hundreds of percents a year consistently and 20% a month, and 5 and 10% a month is just normal. But of course, if you look at the best of the best in the world, their track records, and I'm talking about Warren Buffett and Paul Tudor Jones and Stanley Druckenmiller, their returns are between 20 and 30% a year. So the other thing about a 12% return for me is that, as you probably know, or as I have said in my earlier mentoring sessions, I take generally around 0.5% of risk per position. Certainly between 0.5 and 1%, but generally around 0.5%, sometimes only 0.25% per position. So I take very low risk trades, and actually that's one of the things I've been most pleased about in the month of May, is that I've had a very strong return, but only on each individual trade have taken very low risk on each trade. So my drawdown, my potential drawdown was very low, and it happened to be a very good month. And of course part of that is that we've got nice trending markets, which is which suits my style of trading, because I'm a trend trader. And of course, I mean, I'm hoping I can keep this going for the rest of the year. I'd be very surprised if I do, but if I do, that's obviously going to be an annualized return of well over 100%, a triple figure year, which would be great. Haven't had one of those for a few years either, so it would be great to have one of those. Who knows? Okay, now the first thing is, as you will know already if you've read my free book at tradingbook.net, or you've talked to me, you will know that I'm not one of those traders who likes to talk about their successes and not talk about their downtimes. There's too many people doing that. It's not reality. Yes, I've had a good month, but I don't always have good months. And in fact, I want to kick off the rest of this video talking about a down period I had in 2011. So in 2011, I had a period during the year when I had 19 losses in a row. Now, just to give complete clarity, there was actually one trade in the middle where I had a profit of $31.73. Now, I can't remember what I did then. I suspect I took a trade and immediately didn't like it and just got straight out of it. So I'm not counting that in the I mean, it's essentially brokerage. I'm not counting that in this series. So if you take that trade out, I made 19 losses in a row. Now, just think about that for a second. If you tossed a coin 19 times in a row, the chances of them coming up heads 19 times in a row is astronomical. In fact, I had to go to a spreadsheet to calculate what the odds are of taking 19 losses in a row, or 19 losses in a row on a coin toss, and here it is. One chance in 4,194,304. So obviously I think that when I'm trading, and I've got the track record to prove it, that I'm going to be profitable certainly over a series more than a coin toss, because that's purely random. So somehow I got it so wrong 19 times in a row that the odds against doing that were astronomical, but nevertheless I managed to do it. I also noted, because I spreadsheet all my trades, that I went back to the profit that I made. So I went back 19 trades and then went to the profit, and then went back and I saw there was lots of other losing trades. So in actual fact, I made one profit in 28 trades. So in a period in 2011, I did 28 trades and only one of them was profitable. So that obviously represented a big loss and a big drawdown, and I don't know why it is, and I've talked to some other my trading friends and they don't know why it is, but there are some times when you're trading when no matter what you do, no matter how long you stare at the markets, no matter how much you vary what you're doing, for some reason at some times you simply cannot buy a trade even if you want to. And if you've been trading for long enough, you'll understand that and you'll know that from experience. And then conversely, there are some times when you're trading and it's like if you fell out of bed and knocked into your keyboard and accidentally put on a trade, you'd make money. And I don't know why that is. I think probably there's an element of psychology. I think there's a spiritual element. I think there's also obviously an element of there are times when the way that you trade is in sync with the market. And partly the reason, as I said before, the reason I've had a good May is that I'm a trend trader, and there's been lots of trending markets, and there've been strong trends which have enabled me to take low risk positions, risking maybe 20, 30, 40 points, and then they've gone on 200, 300 points in my favor. So let me talk about also about a mistake that I made in May, because May wasn't perfect by any means. You will know, and let's have a look at the charts now. I don't want to look at Aussie USD right now. I want to look at the Nikkei index. Now you will know from my emails and my previous videos that one of the favorite trade I've had really since February has been long Nikkei. And as you can see on this chart, the trend, well, this is April, I can take it back. Why don't we do that? Take it right back to February. And it resolves itself. Okay. So you can see right from, well, even from earlier, but I started getting interested in it in February. We've had this lovely uptrend. Obviously there's been some retracements, but the trend has been stunning. Okay, so I have been somewhat in and out of this trade all the way through. So I didn't take my position and just hold it without thinking about it, as I sometimes do. But generally I've held a trade on long Nikkei since February, with that, as I say, the caveat that I have sometimes taken profit and waited for a better opportunity to enter. And you can go back and look at an earlier video. Now this is one of those situations where I guess I just got lucky. I took profit in all of my positions, but certainly my biggest Nikkei position, 10 pips or 10 yen from the high. And so the high here was 15,995 and I got out at 15,985. And I know that also sounds like show me the proof, and I really don't like it when people make these wild claims on the internet. So if you do need proof of that, please drop me an email and I will send you a scan of my trading record produced by my broker to show that I got out at that level. Again, it's so easy to say things that aren't true, and I'm just not interested in doing that. I was going to scan it and put it up here, but most of you will just believe me. But if you don't, drop me an email and I'll send you the screen. Okay, so I got out of my position here. Now I have been riding this long since February, and I made a mistake here, and I did what I tell people I'm mentoring not to do, and that is get married to the trade, or fall in love with the trade. And so I expected that after this is a 4-hour chart, by the way, as you can see here. After there was a pullback, I thought it would go on further, and I took a couple of very small low risk long positions in around here, and as you can see, I obviously got stopped out. What I should have done is not been married to the position, and what I should have done is realized that this candle is an unusual one. It's a big down candle. This one here and this one here, if you go to the daily, obviously this becomes a very large candle, and that there haven't been any candles like that in the whole move up, not of that magnitude. And so I should have been thinking, actually this looks like it's turned around and going down. And had I had that point of view, obviously there were massive opportunities to take long trades. This is a perfect little candle in here, this little green one. A break below that candle with a stop above. I can't remember actually now whether it broke above first or below. Obviously if it broke above first, then you'd be okay, but when if it broke below first, then it would have stopped you out above the high. This is a perfectly good candle. You take the entry below the low of that candle with a stop above. Again, you'd have to make sure the break, the up move happened before the down move, but you could have taken it on this candle with the break down here, and obviously, you know, there are plenty of opportunities. Maybe we'll go to the daily to take short trades. So I made a mistake. It didn't cost me very much because, as I said, I had a couple of very small low risk entries, expecting the uptrend to resume. What I should have done is either do nothing or look for opportunities on the downside. Okay, so yes, I've had a good month. No, I'm not getting carried away with it. I am continuing to take very small positions. The reason being, that's a trade alarm going off. I'll deal with that in a couple of minutes. The reason being is that the reason I had a successful month in May is that I took small risk positions and in trending markets. Now the worst thing you can do as a trader is, after you've had a windfall or a successful run and you're flush with cash, is to look around for more trading opportunities that are there, or to double, triple, quadruple or multiply by 10 your position size, thinking that you're now a ruler of the world, that you're clearly cleaning up and whatever. Those are the times when you get your head handed to you by the market, because you are not doing the things you used to do, and also the market is not likely to continue going the way you expect it to all the time. And if you start taking massive positions when you're flush with cash, that's when you get yourself hurt. So I'm continuing to do the same kind of things, and so far June is working out nicely as well. It's only the 6th of June here in New Zealand, 5th of June everywhere else in the world, and so far so good. So I hope that is useful, especially in terms of, you know, understanding that there are times when you are in sync with the markets, and the types of trades you do are simply in line with the way that the market is running. But also remembering that when you have those periods where you go, nothing I do makes sense, I cannot make money in this market, I've had loss after loss after loss, it's not the end of the world. In those times you need to trade extremely small, way smaller than you would normally do. You need to put some runs on the board, to put some black ink in the profit column, and just wait patiently for those opportunities to arise. Hope that's helpful. Happy trading, and talk soon.